to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point.
Nikkei is trading with gains of over 2%. The rest of the markets are absolutely flat.
Markets essentially viewed the meeting with some degree of hawkishness.
They want to make sure that they keep it near full employment.
They've approved a new liquor policy which starts from the 1st of October for the next couple of years.
The Nifty closing in on 25,500. There we go. We actually had 25,500 for a bit.
I think what matters more than the quantum of whether this was 25 or 50 is why is the Fed cutting?
Our base case view that the US will go through soft landing.
I'm genuinely surprised by the size of the rate cut.
No case has been made out for reconsidering the decision on AGR.
When I spoke seriously about the fair value of the stock, you seem to suggest I was speaking in jest.
Midcaps, which are sulking in trade today, a big cut there, though they have recovered from the lows.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon and welcome to another edition of Closing Bell. I'm Surabhi Upadhyay. With me in the studios today is Mangalam Malu, and what we have is a very interesting market. And it's not often that we say this, Mangalam. India being a rank underperformer. Look at Asia, the way markets have reacted to that big bazooka 50 basis points rate cut. Asia has been all up and about. Europe is trading positive. Even US futures right now, for what it's worth, Nasdaq futures are up almost 2%. Dow, S&P 500, all futures are up. We've seen a bit of a pause, brakes being slammed and some profit taking today.
I reckon it was also because of the kind of outperformance that we've seen in the past as well, right? So maybe the street is looking at free money coming in or money coming in at a lower price from the Fed and deploying it to markets other than India, which perhaps may not be as expensive as India is. Be that as it may, it could also be routine profit taking for our markets. It's a day of two halves. If you look at it from the highs, the Nifty is corrected about 200 odd points. We've had the mid-cap index take the sharpest knockdown, down almost 1,500 points from today's trading high as well, which was a record high. The Nifty Bank went within 4 points of a fresh record high. And from there as well, it saw a bit of a sell-off. So let's see how it pans out. What are you spotting in stocks? I reckon, 1,900 stocks on the obverse side as against 500, which are gaining a lot moving around.
Yeah, I mean, the bears have chosen quite a day to kind of come out and announce their presence, because otherwise, when global markets are rejoicing that US money seems to be getting cheaper with this rate cut. Anyway, for what it's worth, I mean, the Nifty, at least it's bounced back above the 25,400 level. That's one way of looking at it, because the lowest point was actually below that mark. So let's see what the next 1 hour brings. It's also Thursday, which means you have the weekly options expiry that will play out. So let's see if there's some sharp changes around 315. For what it's worth, a couple of stocks on the way up. There's a fair bit of a consumer play, both on FMCG, and if you're counting auto as consumer, then a bit of that as well. So NTPC, Lever, Maruti, Titan, Bajaj Auto, Tata Consumer, these are names on top. And had it not been for the Bank Nifty, I mean, despite all this, the Bank Nifty is still retaining a much better looking gain than the Nifty. And had it not been for the banks, then of course the picture for the Nifty would have been very, very different. So even now, Kotak, for instance, HDFC Bank, the big boys are still fighting for the bulls. Reliance, ITC, these stocks are still holding out in green. So let's see. I think it might be an interesting last 1 hour.
It'll be a very interesting last 1 hour. You said what a day that the bears have chosen to announce their presence. I say, what a week the bears have chosen to announce their presence, at least in the mid-cap end of things as well. Because, even if you look at the mid-cap index fall from days high, close to around 900 points lower right now, and the broader market's advanced decline ratio, those lines come up for you. It's the third day running where we have over 1,500 stocks on the NSE declining. And give or take everything this week, if you look at it, the Nifty is still up 0.2, 0.3%. So marginally in the green for this week. The banks are doing a lot better, of course, led by private sector banks. So the Nifty Bank is up 2%. The mid-cap and the small-cap indices, both of them down 2.5 to 3% this week itself. And that's at an index level. So a lot of stocks seeing a lot more pressure. I'll be interested to see how the Nifty Bank performs from here on. Is there a risk of a bit of a double top on the Nifty Bank? The previous high was 53,357. Today's high was 53,353. So those are a couple of factors that I'll be watching out for. And on the Nifty weekly options expiry itself, This afternoon, the trade was the 25,500 straddle, which is a call and a put together. Now with the market having corrected from the highs, it's come down to 25,400. What's the premium on offer of the 25,400 call? 20 rupees. If you look at the 25,400 put as well, that comes up for you. The premium is close to around 10 rupees. So you sell both the 25,400 call and put. The range that you're playing for expiry will be 25,370 at the lower level, and on the way up 25,430. Do we stick in this narrow band, or do we break down or break out of it? Will be something that will determine the course of the next hour of trade.
Absolutely. So let's watch how this goes. By the way, I mean, just to name one or two stocks before we get to the strategies, some of the news-based stocks are seeing very sharp moves today, and you'll hear more about them in the program. So Vodafone Idea and Indus Towers, absolute slam dunk on these names, thanks to the fact that the Supreme Court is not looking at any sort of a relief now. It's dismissed that curative petition, and those stocks have seen a lot of price damage in the course of the afternoon. There's IIFL Finance, on which there's continued regulatory uncertainty, and Bloomberg put out a story saying that maybe some of the rating agencies could be cutting their rating on IIFL Finance. So that stock's under pressure. And more names. I mean, case in point would be Bajaj Housing. Fantastic listing, but now there is some caution and some money coming off the table. 7% down on Bajaj Finance as well. So it's just a glimpse into the kind of mid-cap correction that we're seeing today. So how should you be positioning yourself for the next 1 hour, the last 1 hour? We have Mitesh joining in as always. Mitesh, good afternoon. So yeah, it's not really played as per script for the bulls, at least not till now. What's your advice for the moment?
So, one, I think there were signs of market going into consolidation. But with the Fed event, I think the gap up was much bigger than what I had anticipated. And therefore, it was a bit surprising. But, I think as Mangalam was also highlighting, the Bank Nifty, which is the one which has been kind of index up for the last 5 sessions, was meeting its all-time high. The highest ever closing is about 53,100, and the highs is about 53,350 levels. And today we got a high of 53,353. So very clearly, it was a index which was carrying the weight of Nifty. It was an index which had rallied for 5-6 days, was overbought, was meeting the earlier highs. I think there was a good chance of profit booking happening. That is what has happened. It doesn't look like a kind of any kind of negative setup, but just I think a mild pullback to the hourly and 2-hourly averages could take place, and therefore the consolidation which I thought started yesterday appears to have started today. And I would still believe that till the Bank Nifty now breaks into fresh highs, I think you might see the markets go through 1 or 2 days of mild choppiness and some pullback. On the stock side, sorry. Go ahead. So having said that, on the stock side, the index, which is rallying is, the stock which are rallying is ABFR, and I think, that's now close to its earlier highs. Very good pattern over here. Buy with a stop below levels of 327 and look for a target of 346, 347 to begin with. And on the sell side is ABB. Disclaimer that we have some put options positions, so there's vested interest. But ABB appears to have broken down the recent lows of 74.20, 74.50 zone, and now it's trading just around those levels. But I suspect the setup is negative, so sell here. Keep a stop above 75.20 and look for a target of around 7,200.
I want your thoughts on 2 stocks in particular. One is Pidilite. Pidilite ended lower in yesterday's trading session because crude prices were higher. Now it's seen that dip being bought. Pidilite currently has moved to the high point of trade. Consumer stocks generally are doing well today. That's one. And the other one is Jubilant Foodworks. It's been in this, it's a sleeper hit. From its lows, it's rallied about 60%. And come what may, the stock continues to hold in the green, at least in the face of the choppiness that we're seeing in the markets over the last couple of weeks. At least we've seen some strength here in both Jubilant Food and Pidilite. Do you have a view?
So Mangalam, Jubilant is something which I've covered on the long-term chart basis. The stock has recovered and turned very, very positive on the long-term charts, and I suspect I'm looking at a target of around 780 to 800 over here, and eventually the highest ever monthly closing of 805. So that should be tested. So the 780, 805 is the target range for Jubilant. My only worry is that this is a 6th monthly candle which is on the positive side. So the stock in the short to medium term is very overbought. So here I would want to buy into it, but on a mild decline. I believe that 620, 630 range on the downside will hold. So any 20-30 point decline, I think the stock should be added gradually, and eventually, I think in the next 4 or 5 months, it could possibly meet the earlier highs of 800 plus levels, and then we might even look at higher levels. Pidilite is something which has also had a good trading rally. In fact, if you look at all these stocks, the Pidilite, Asian Paints, in the last few weeks, they've moved up generally. And Pidilite also made a high of 3,300 before, now correcting to about 32.30, 32.20 levels. But the structure is positive. Keeping yesterday's low of 31.60 as a reference point, I think the stock can be bought from a trading perspective around 3,200 with a stop below 31.60 and a retest of 3,300 could be there and possibly even higher levels could be tested. So positive on both and would want to buy both on slightly lower levels.
Okay. All right. Got that, Mitesh. Thanks very much for it. Actually, in the mid-cap market, I'm just trying to spot winners. One pocket that's looking interesting is actually the snack makers. Gopal Snacks on a day like today about 6% higher. Pratap Snacks is actually moving higher now, about 3.5% on that stock as well. In the morning, Bikaji was up. Let's see if Bikaji is still retaining that gain. But quite interesting. So some of these names, I think maybe, hunger stocks are in focus. So there's Alcobev. We'll talk about that as well, Manglam. And then the snack makers not doing too bad today.
In economics, they say, there are products which are corollary products. If the price of X goes up, maybe the demand for Y goes
will also
down
go up.
as well. So Alcobev stocks, they're doing extremely well. So maybe snack stocks are reacting
in tandem.
positively for that as well. Because he was actually up 6% yesterday as well. This morning did well. So these stocks are doing well, but it's the Alcobev stocks which are doing a lot better in today's trading session. Don't have United Spirits and Radico Khetan's today's move, make you feel otherwise, largely because one, there has been an important development out here. What is that? The Andhra Pradesh cabinet has gone ahead and approved the new liquor policy. The new liquor policy was something that the street was widely anticipating. It starts from October 1, allows the retail sale of liquor by private players, basically putting into effect the rules that were there pre-2019, and price of select brands will also be brought down below that 99 rupees per quarter mark itself. How much can that move the needle by? For a company that has a fair amount of sales coming in from Andhra, something like Tilak Nagar Industries, they said that, if this is announced, then maybe for the next 5 years, they can see volumes compound by around 8 to 10%. We spoke to analysts as well, and they said that, this policy can grow volumes for 7 to 8% for the alcohol bev players, and FY26 itself could see 14 to 15% growth for beer and 10 to 12% growth for P&A spirits itself. The reason why the stocks are selling off today is because in anticipation of this news, they had seen a big rally, and the mid-cap index also is in a bit of a profit-taking mood itself. Before this news came by, Global Spirits was up 51%, Radico Khaitan was up 33% in the month preceding this, United Spirits was up 10%. The only underperformer here was United Breweries. Yeah. And today, that's the one that is reacting the most positively as well. So if you pull up, the intraday chart of United Breweries, you'd see that there is a big outperformance today as against the underperformance that we had seen in the last 1 month itself. So maybe sell on news for all the other stocks, and United Breweries, because it hadn't rallied, is now participating.
Absolutely. I remember that conversation we had with Karan Taurani as well. I mean, even he singled out this one stock as having the valuation comfort because it's not moved up and probably better prospects in the second half of the year with beer consumption as something to keep in mind. And stocks up about 4% today. Well, let's take the conversation forward with Deven Choksi. He's joining in to discuss some fundamental ideas. Deven, so I don't know, Alcobev stocks or Namkeen, Bhujia, chips. Do you like anything? I'm not talking about the products, but the companies in the stocks. Anything in your coverage? Anything that's on your radar?
Good afternoon, Surbi. Alcohol, I don't drink, so I can't say I like it. And snacks, I do eat, but I think they're too expensive to buy. I guess but Deven, probably not as expensive as the market or the stocks, right? These days you can buy the product, but buying the manufacturer's stock is usually a problem because of market valuations. But anyway, let's talk about these. Let's talk about the names here and whether they make sense to you. Yeah, I think most of the items, which are listed market, they are expensively traded. And if you look at some of the names, I think their performance, the growth, I think that you see on a quarter-over-quarter basis or even for that matter year-over-year basis, I think the profit growth is not very consistent. I think that is what in general I come across, this particular pattern. And that's what I'm not fully clear about. Okay, I agree with one particular aspect that in current environment, the input costs likely to remain lower because I think most of the commodity prices are likely to behave well in the current environment. If that is so, then certainly I think there is a good chance that these companies would probably have relatively better profit margin to talk about.
As such, on the other side, the top line growth is not doubted because top line growth is related to the consumer's wallet and consumer is spending money. So from that perspective, most of the snake stocks, I think, are likely to show top line performance far better. Bottom line performance will have to be validated with the current cost structure, which is like slightly more favorable at this point of time.
That point, Devin, thanks a lot for that. And you know, I speak on behalf of Devin as well. People like me and Devin are very dangerous for people who drink. Why is that? Because while we will not partner you in the alcohol, session, both of us are compulsive munchers of all the snacks that are there on the table. So while you can enjoy your drink, if there is bhujia, if there are any sort of namkeen, if there is any farsan, both Devin and I will finish it. We may not look like it, but we definitely are compulsive munchers out here. Devin, in particular, I wanted your thoughts on Bajaj Housing Finance. Why do I say that? Because, you know, you've been quite vocal about its valuation differential with all the others, etc. The last 2 days, the street has seen some sense or rationale in, you know, booking some profits or the gains that we saw over the first 2 trading sessions of the stock itself. In the last 2 trading sessions, it's down about 10-12% odd. At what point does it become a little more attractive for you?
Yeah, so I think if you have to take, I think in perspective, the first 2 days of listing and I think now, in first 2 days of listing, probably I think a lot of grey market transaction had to come up for square up. Because maybe I think the market was not anticipating, grey market was not anticipating the kind of subscription that the company received. And as a result of which, I think the sellers committed themselves, which ultimately they had to short cover and probably pay it off. So that's where probably you saw a surge in the stock price. I think that's well explained here. But on the other side, I think the valuation wise, the company remains far more expensive at this point of time. Even if you factor in 30% rate of CAGR growth in the loan book, you still find that I think the valuation 3 years from now is 3.5 times price to book value for the housing finance business in this case. I'm not worried about that particular 3.5 times price to book value, particularly when I see the company with the multiple revenue model stream that they have. On one side, they have got the mortgage-based revenue model. On the other side, developer finance model, lease discounting model, and loan against property model. Except the mortgage-based model, I think in rest of the models, they have a real good ability to command better price at the time of lending. And assuming that this company at 160 rupee price, they have to, suppose if they have to offload 3% of their stake, the company at this point of time, probably we are talking about around 4,000 crores of rupees that they would get. The serviceable cost of the equity is only on 10, balance 150 is non-serviceable. So to that extent, I think they can actually expand the NIM very fast. That's a good possibility for this company. And that's where I think this company deserves to get the premium valuation. But it is already priced in at 3.5 times price to book value. That is what I would like to put across. Definitely very comfortable buying into this company whenever I think the opportunity comes along from the investment point of view at a little lower price.
Okay, so well, that's a view on some of those names. Let's move to the other big story of the day, and that's coming in from the telecom space. Like we told you, stocks are reacting very, very sharply. And this happened after the Supreme Court pretty much delivered a blow to the hopes of telecom players with respect to any relief on the AGR dues and the way those dues are being calculated. So the Supreme Court has pretty much struck down that curative petition, saying that there's going to be no change in the adjusted gross revenue or the AGR dues. And all of those stocks have been down quite a bit. The companies had, of course, moved court with that curative petition, saying that there was an error in computation. Well, it was not upheld by the apex court. As you can see, the Bharti Airtel is, of course, reacting a little positively, and different dynamics at play here. Perhaps the market believing that Vodafone's further loss could be Bharti and Jio's gain. But the ones where the sharpest reaction is playing out is, of course, Vodafone Idea. And the other one is Indus Towers. Pull up Indus. It's been down 10% since that verdict came in. So what happens now, and what's the word on the street? Let's go across to Hormaz for more. Hormaz, plenty of price damage here.
Oh, well, it is. And it's even the case, right, for Vodafone Idea. It's not had a very good month whatsoever. And it's almost down 19% now, the biggest single day fall that the stock has seen since January of 2022. And as you mentioned, right, it was because this news came that the Supreme Court has dismissed that curative petition when it comes to the AGR dues. They had filed this petition saying that there has been an error in computation, but the Supreme Court said that they have not made any case for themselves, and hence these petitions are dismissed. Now, as of date, Vodafone Idea's current AGR dues are around 70,300 crore rupees. It's a massive sum for Vodafone Idea, and just in anticipation of this verdict from the Supreme Court, a lot of brokerages had pinned hopes that there might be some relief, and thereby leading to some bullish commentary on Vodafone Idea. And Citi had written a note on the 29th of August. They had mentioned that any potential relief can boost its stock price by 5 rupees a share. And even Balaji Subramaniam, who we spoke to after the verdict, had mentioned that if such a move would have transpired, then the Vodafone Idea share price could have received a 4 to 5 rupee boost as well. However, just a few days before this verdict, Goldman Sachs on the 6th of September had said that the fundraise that Vodafone Idea has done will not be enough to protect market share. They also said that their cash flow will remain negative until FY31, and as a result, they had a price target of 2.5 rupees. So it'll be interesting to see that these bullish calls that came in on Vodafone Idea in anticipation of this, what happens to that now when the news comes in tomorrow. As of now, there are 22 analysts who have coverage on the stock. 13 of them have a sell recommendation. 4 of them have a buy rating. Be interesting to see how the street reacts to it tomorrow, especially the sell side analysts. But for now, 20% down on Vodafone Idea stock, below its FPO price of 11 rupees, the biggest single day fall since January of 2022.
Absolutely, take that point, Hormaz. The biggest single day fall in a long time, also below the FPO price. In fact, from its 52-week high, which it had hit post the FPO had happened, closer to 19 odd rupees, the stock has now almost halved. How should one look at this? Because Vodafone always was fraught with a fair amount of risk, and one of those important risks has played out. Telecom, until Vodafone saw some signs of life, was just a one clean player, that was Bharti Airtel. Then, of course, there was Reliance, but that had other parts of the business as well. What are your thoughts here? Does everyone else's loss result in one person's gain, or should you still look at Vodafone as a hopeful after the big correction that it's seen from the top?
Mangalam, for a while, I think if you just keep aside this 31,000 crore worth of erroneous calculation amount, I think for which the petition was filed, I think still the total amount of dues pertaining to dues pertaining to AGR is about 70,000 crores for Vodafone Idea, and I think a total debt of around 40,000 crores. No doubt they have raised money through right issue, but still I think this is a large sum of money. On the other side, I think when I see the business strategy, I'm not at all sure. I think which have been earlier also expressing the same point. The 4G implementation, I think, which they are currently doing is probably yesterday. I think today is 5G reality and tomorrow is 6G. I think majority of the large operators, including Jio, including Bharti, have been preparing for the next level of 6G implementation going forward, and they have created the infrastructure ready for themselves. Today, Vodafone and BSNL kind of companies talking about 4G in order to just protect the customers, I think, which they otherwise lose out. I think I'm not getting that part clear, because the amount of money which will be required to spend, I think, for implementation of the next generation of network is going to be equally challenging. As I see it, I think next 5 to 6 years, I think Vodafone Idea, BSNL kind of companies would continuously demand cash for implementation of different projects and I think technology. So to that extent, I think I'm not convinced on the fundamentals of this particular company. They would be cash-hungry businesses. As against, I think the cash-producing business like Jio, which is producing about 60,000 crore worth of EBITDA. So one would like to stay with the business, I think, which is producing positive EBITDA, vis-a-vis, I think, the one which is not producing that EBITDA kind of a situation.
Okay. All right, Deven, we will leave it on that note for today. Thank you very much for joining in. You have a good rest of the afternoon. And we look forward to our next conversation. We need to take a break. On the other side, key excerpts coming up from our conversation with Jefferies' Mahesh Nadurkar.
There's a fresh bout of selling that we're seeing in the market right now. The Nifty is holding in the green with just about 32 odd points. The stocks which are falling from the highs, Apollo Hospital is currently at the lower end of today's trading range. We have Dr. Reddy's, which has come down lower as well. Bharti Airtel, which was doing well too, has come off the highs. Alongside that, we have ITC and Reliance, both of them weighing down on the Nifty. So making the last hour of trade extremely crucial to track. But on the sidelines of the third India Forum for Jefferies, Prashant caught up with Mahesh Nandurkar and started asking him about his views on the FII interest in India, especially in light of the recent purchases that they've been making. Let's hear that out.
We have more than 200 overseas investors, and that actually makes it the largest ever conference by any investment bank in terms of the number of foreign investors participating. At the same time, we also have 100+ corporates as well, and very, very senior level representation, from the chairman and the founder level, and strong representation from the government ministers and other industry experts as well. So the feedback that we're getting from interacting with the investors is that, just the sheer numbers, first of all, tell you that there is a lot of interest, and we are seeing interest coming into India, not just from the traditional India dedicated funds or emerging market fund managers, but also global mandates as well. But clearly what, while the interest is at an extremely high level, at the same time there are some concerns around the valuation. So nobody denies the fact that the economic story, the corporate earnings growth story is looking very strong, and very strong on an absolute basis, very strong on a relative basis as well, because especially now with the expected slowdown in the US economy, the differential growth for India's GDP, the differential growth for Indian corporate sector EPS growth is looking even better. The key question is whether market is already factoring that in. And what has happened is, with a big surge of domestic liquidity, the foreign investors have been looking out for an opportunity to invest, and that opportunity has been denied to them so far.
Do they feel a little left out?
I think they do, because what has also happened is that the number of stocks in the benchmark, if you look at MSCI India, which is the very common benchmark followed by many foreign investors, 5 years ago we had about 75, 78 stocks. Today that number is more than 150. Which means about 70 stocks have got added into the benchmark. These are all new companies across infrastructure, manufacturing, digital economy, and so on. And many of these companies and the sectors themselves, in many cases, are not well understood by many of the foreign investors. So, on one hand, you had an issue of valuations going up because of the strong domestic liquidity, and on the other hand, inclusion of several new stocks into the benchmark, which have actually outperformed the benchmark, where the foreign investors did not have enough familiarity with the sectors, with the company management, with the style of working, etc. So that has prevented them from taking active positions in many of these names. So yes, to that extent, there is that feeling of missing out.
And it kind of ties in with the point which I was talking to Chris earlier, and he was saying that if people who are foreigners who are very familiar with India, they are still okay with what's going on and the kind of surge we're seeing. But generalist FIIs at the margin who are not very familiar, valuations and what's been happening is a bit more of an issue for them. So they're staying away. I think you're echoing that in that sense, right?
True, absolutely. I think one of the biggest change which has happened in the Indian economy is the turnaround of the investment cycle. So the fixed capital formation as a share of GDP has been consistently falling from 2010 down to 2020. And at that time, a very narrow set of high quality stocks did exceedingly well. And many investors actually did very well by being positioned in those narrow set of very high quality stocks, and the multiples for many of the stocks went through the roof. But the turnaround in the investment cycle, which basically talks about the improvement in the risk appetite in the Indian economy, not in the markets, the Indian economy. The risk appetite in the Indian economy has gone up quite a lot over the last 2-3 years, with more investments in infrastructure and manufacturing, in real estate, in power, and so on. Those have been neglected sectors. And so I think what we've been highlighting is exactly this big change of trend, which has a huge implication for sector and stock selection. Yeah, and so my sense is that as more foreign investors take into their stride what has changed in India or what is changing in India, I believe the leadership in terms of the sector and the stocks will be very different over the next 10 years as compared to the last 10 years. A point that I've been making for some time, but it still has long legs.
And they got to get familiar real quick, right? Because otherwise they get elbowed out very fast. Because this surge of domestic money leaves little room in that sense. So
absolutely,
and that's been a problem, I guess, for a lot of locals as well, local and domestic institutional investors as well.
Yes.
Mahesh, so two things. What are they most excited about for large foreign investors? What is the worry, if there is one, that you picked up?
I think the single biggest worry is still on the valuation side, as we just discussed, and whether as I said, the good news is already factored in.
Okay.
But outside of that, there is also some worry about the recent sort of election mandates and what kind of impact that it has on the capex activities, the government's investment plans going forward. We've already seen some changes at the state government level in terms of the policy making, and we've seen that there has been more sort of social spending and
a lot of handouts across.
A lot of handouts, yeah. It's been happening. So there is that worry that whether the similar things can happen at the central government level as well, and then what kind of impact that it can have on this. I talked about this turnaround in the investment cycle, whether that gets stymied by that. But thankfully, we had a few very senior ministers, at the conference, and they clearly allayed, those concerns. But actually, I would go one step ahead and actually highlight that one of the biggest misconception, I would say, in the Indian market today is that it's the government spending which is driving capex, and the private sector is lagging behind. Actually, that's a big misconception, in my view, because barring just one or two sectors like refining and petrochemicals, all other sectors are already seeing heavy investment from the private sector, be it steel or cement or infrastructure sectors like power and like telecom and airports and seaports and so on. And if you look at even the hard macro data, that shows you that like last year, the private corporate capex growth was up 18%. Household capex growth, which is in housing sector, which is real estate, was also up 18 to 20%. That's already there. Also, more bottom-up data like the ones reported by RBI recently, wherein they have taken together the private projects approved by banks for funding. They have not, the loan disbursals haven't happened as yet. The loans approved. And if you look at that trend, it already shows a 20% CAGR between FY19. I'm not talking FY20 because that was a low base.
Right.
If you look at the pre-COVID year, from there also it has grown 20%. So I think the common perception that private sector spending is lagging and therefore everything depends on the government, and if they slow down, what happens? I think that sort of conception.
In that sense, the fire has been lit, the spark is there. And it's going to be self-sustaining cycle.
Absolutely.
And perhaps will last for some time, right?
So these cycles are usually 8 to 10 year cycles.
Right.
So broadly speaking, I can say that 2000 to 2010 was an up cycle, 2010 to 20 was a down cycle, 21 was the turnaround. And I think, if you just go by the sheer history, and I'm not going by sheer history, there are other numbers as well, but I think this cycle should last till 2030, if not longer.
Okay. So, sectorally speaking, you were very bullish on real estate as a space, capital goods, industrials, etc. for the last many years. They've done very well.
Yeah.
But you've turned a little bit now, right? A little more. Is it just tactically turning a little cautious, or is it a more fundamental change in view?
Yeah, no.
Because stocks have run up quite a bit. Go on.
Yeah, stocks have run up. So yeah, this shift is a bit more tactical. So as I mentioned, these cycles are long, and we are somewhere in the initial or maybe the mid stages of cycle in some of these sectors, if you look at it. So I still a firm believer that the real estate cycle, the infra, the capex, the manufacturing cycle will go until 2030, if not longer. Why I'm saying if not longer, because this time the regulators have also are also acting. The government sort of policies are also acting in a very prudent manner. They're actually learning from the mistakes that we did in the previous cycle.
Sure.
Ideally, the goal of the policymakers is to avoid this boom-bust cycle. So we have a sustained but a longer-term upcycle. So yeah, so to answer your question, still very, very optimistic on the real estate and the infra capex cycle. But at some of the stock level, I believe given the huge surge of domestic liquidity has taken the valuations in some of these stocks or some of these sectors to a higher level. And I'm not just commenting on the valuations, actually I'm just commenting on the quantum of the flows that are coming in. And while I've been a big bull on this whole financialization of savings and the equity culture emergence in the Indian households, but I think some of the numbers have gone up in a big way, and I think maybe to an extent gone to a level which I feel are unsustainably high from the flows perspective. So therefore we have taken some money off the table on some of these infra capex real estate names, but as I said, it's a tactical view. The fundamental view still remains bullish from a long-term perspective.
So Jefferies is not altering its call, still remains quite favorably disposed towards capex plays and real estate among some of their preferred sectors. We'll take a break on that note, come back on the other side, and of course all the latest buzz from dealing rooms today. We'll be joined by Nimesh, and then of course some trading calls coming up with Mintesh Thakur as well. Welcome back. So we still have 20 minutes to go. The markets managed to hold on to a little bit of the gain on the Nifty. So at least that fall hasn't accentuated.
basically 30 to 40 point up move on the index. We have Nimesh joining in. Nimesh, so the big day is finally over. The Fed reaction is played out. Excuse me. And a fair amount of underperformance here in India.
Oh, absolutely. Surbhi, looks like it's a clear day of sell-on news. We saw that happening in the US markets last night, and that's playing out in India as well. The big Fed event seems to be out of the way now. It came as a bit of a surprise, 50 basis points, but it's done now. So I guess that's the reason why you're seeing a bit of profit booking as well. While the Nifty is holding on, thanks to some sector rotation, it's the broader markets which are under pressure today. And I was talking to some larger investors, and there was an interesting feedback that I picked up. If you look at today's market as well, it's largely dragged by telecom names because of that Supreme Court shocker and the PSUs. Word on PSUs, Surbhi, clearly, the leader of this bull market was the PSUs, and that seems to be under pressure now. And maybe that is why you're seeing a bit of underperformance in the broader market stocks as well. So, for a while, there was a lot of feedback from investors that maybe a time has come for the large caps to outperform mid caps. Maybe today is the first, confirmation of the same, that from here on, maybe for the time being, you will see a bit of outperformance in the Nifty. And that's also because of some bit of rotation will happen. So yesterday we saw banks participating. Today we are seeing FMCG and consumer names participating on the upside. So I guess that's likely to be the trend. From a flow perspective, again, it's a mixed day. I'm not hearing very large selling, but you might see a big sell number largely because of two pockets. One is telecom, which was little overbought from institutions of late, and of course the PSUs as well. So that's the pain point in today's market. But it looks like it's a first sign of a reversal in trend, wherein the broader markets underperform, and you see a bit of outperformance in the Nifty to continue.
It's so interesting, Nimesh, that up until now everyone was saying the PSU basket is overbought. There is a bit of a frenzy out there, etc., and that large caps have some value on offer. But when that switch happens, when it starts to see, when the market starts to see that what was being told already, people suddenly still get scared once again. That's the way the market works. What are the individual stocks that you're watching?
Well, so as I said, there is a bit of sector rotation happening, and within that, the first name in my list is Nestle. For second day running, that stock is relatively outperforming. Even in today's weak market, it's up 2%. The delivery is on a higher side, and I understand some domestic mutual funds, especially one large mutual fund, has done an active buyer in Nestle of late, and hence a bit of outperformance there. So that's the first name. The second stock is Vanberry, a small stock, but in a weak market like today, that's relatively outperforming. Last I checked, it was up 5%. The volumes are slightly on the better side, and I understand the company is likely to raise funds, preferably through a pref issue, is a buzz as far as Vanberry is concerned. The third name is Bandhan Bank. While there was high delivery marked for larger banks like ICICI Bank and Kotak Bank in the last few days, Bandhan Bank stands out today on back of very strong buy flows. So expect high delivery volumes, and there is a very high FI buying happening in Bandhan Bank at these levels. And the last name is Oracle Finance. For second day running, that stock is under pressure. The stock is already in F&O ban. We saw a 10% cut yesterday, 4.5% cut today as well. But at these levels, some bit of cash buying has started in Oracle from larger FIs. So it looks like some institutional activity on the cash side has started in Oracle Finance.
Right, Nimesh, thanks a lot for that. So those were a bunch of stocks which Nimesh has picked tidbits on, and the dealing room setup as well. Good time to get in Mitesh for the reverse trade tomorrow. Mitesh, what is the tomorrow trade? Is it more short or is it on the long side?
I have in fact long ideas, though during the day we had some short calls as well. ICICI GI after a pullback seems to be recovering well. So BTST here with a stop at 2184 for targets of 2230. And Max Health is something which I would recommend as a short-term trading buy. Keep a stop below levels of 960 and look for targets of 1045.
When you say ICICI GI, you mean the general insurance business, right?
That's right. That's right.
Perfect. So we'll just flash that on the screen for you. And Max Health, you just pointed that out. It's a big up move that we're seeing on the stock. In fact, it's currently seen a bit of a spike as we speak as well. But let's move on. One of the stocks which is surging right now is Spencer's Retail. It's up 11%, and most of the gains have happened in just the last couple of minutes or so, and decent volumes out there as well. All the other RP Sanjeev Goenka owned group companies are buzzing around. The BPM service provider First Source has announced an expansion in the Australian market as well. The company will set up a new headquarter in Melbourne. Speaking to CNBC-TV18, Sanjeev Goenka says that he remains steadfast on his target to increase First Source profits by 2.5 times in the next 3 years and margins by 3% as well, he hints that the company could announce an important overseas acquisition soon as well. This is something we'll keep an eye out on. Listen to that conversation. We'll slip into a short break, come back, and thereafter talk about the market closing.
Firstsource has been, over the last few years, we've been reinventing ourselves such that we can earn the right to grow. And having progressed significantly on that journey of having earned or earning the right to grow, we are now growing. US, UK, and we do believe the third major international market for us could be Australia. It's a beginning. We are enthused by what the state of Victoria offers. We are enthused by the fact that they have some large corporate presence there. And we do believe that we can make a difference in the offering that we make to companies there.
Right. Now, Firstsource has been bringing digital transformation solutions to companies across the board for many years now. What's going to be the quantum of your investment when you're setting up this base or your headquarters in Melbourne?
In this industry, when you talk of investments, you talk of FTEs. So you don't really talk of $1 million per se, but you talk of FTEs. So we begin small. We begin with about 300 to 500 FTEs, but we'll grow and we'll ramp it up very rapidly.
Okay, so there's a plan to increase growth and investments rapidly. But why Australia, if we were to ask you? Why did you choose this as your next destination for growth?
There are many corporates who are headquartered in Australia, and we do believe that's an opportunity that exists. It's an opportunity to be grabbed, and you don't have too many major service providers there.
Okay. Now, in terms of the jobs that are getting created, one, onshore in Australia, and does this also help you increase the flow of employees from India to Australia? How many jobs could it create in Australia, and how many jobs from the Indian market?
Typically, onshore-offshore ratios would be 1:3. And so for every job that's created in Australia, you'd expect to see 3 in India.
Right. And what would be the focus of Firstsource's business and expansion plans in Australia right now? You have been saying that AI and generative AI is the big priority for you right now. So can we expect Firstsource to work in that direction with clients in Australia?
Definitely. Definitely. And we do believe we will work on our strengths on the basic sectors that we operate in, where we excel in. Those are the sectors that we will like to take our experiences from other countries to Australia.
Right. What kind of growth are you expecting in the Australian market? You've already been present in US and UK. How significantly do you expect Australia to contribute to Firstsource's business in the coming years?
I think over a period of time, we do expect Australia to become a significant contributor. The last quarter, Firstsource gave the highest growth in revenue terms for the industry, and which we've never had in the past. So it just proves that we are growing faster than the industry. Whether we will continue to be the fastest or not, I don't know, but we will continue to be amongst the fastest growth rate companies in the sector.
Right. Any acquisitions that are on the cards for Firstsource?
You know, inorganic growth is a way of life, as much as organic growth is. And as we speak, there are different conversations going on with different companies. So fingers crossed. Hopefully, soon.
Okay, maybe we can nudge you a little more. Is it going to be in the AI space?
Just wait.
Okay.
Just wait. Hopefully soon.
Hopefully soon. All right. If we were to ask you about within different business solutions that you're offering right now, which ones are you most bullish about, or you expect the company to focus on in the greatest possible manner over the next few years?
You know, we do...
The number one priority, maybe.
I don't think I'm going to single out just one priority. I mean, if I had to take one objective for First Source, it would be a growth in margins and a growth in revenues. We do expect margins to grow by 3% over the next few years, and that's our target. And that's what we are working on very, very consciously. And to have significant growth in our revenues organically plus inorganically.
Welcome back. Spencer's Retail, the stock is up 10%. We were talking about it. We understand that, the commentary that has come in on Spencer's Retail from Sanjeev Goenka to an interview on Money Control itself. He suggests that they are likely to break even by March itself. And also, they've too have announced their foray into quick commerce with 30-minute deliveries. And 30-minute deliveries is something that, a lot of these other players are looking at as well. And that's caused a bit of a flutter among all the retail players too. So look at Avenue Supermarts. That too has recovered about 4% from lows, currently moved to the high point of trade. So just keep an eye out on, legacy incumbent retailers, brick and mortar retailers, looking to up their ante with 30-minute to 2-hour deliveries as well, and some of them even giving express deliveries at no delivery cost attached. So as a result of which, we are seeing these stocks gain some traction. Amrish Baliga joins us now. Amrish, do you track Spencer's? What are your thoughts on Spencer's at current levels?
No, in fact, I don't track it closely, but the sort of news which is coming out as far as this quick delivery is concerned, I think that's positive. And the other thing is about the profitability, which Mr. Goenka talked about. I think both these are positive, because of which, even in a market like this, we have seen the stock moving up. But then I think this will be only sentimental. I mean, until we really start seeing that in black and white, I don't think we can see a major up move. But then, yes, temporarily, yes, I think you can see possibly a bit more due to the momentum.
Okay, got that. Amrish, hi, good afternoon. Day of correction for the for the broader markets. But, if you talk about the large cap space, one stock that's done really well, unlike a lot of its other PSU peers, is actually NTPC. I guess the market's getting excited about this renewables IPO, right? Anything green, it has a right word, the right sound, with the market lapping up these ideas. What's your sense, I mean, on the base business itself and how you would look at the renewable side of it?
In fact, I've been liking NTPC for a while, especially because of the sort of a focus which they have on green energy, and because of which, I mean, I also have a pick today, which is from a similar space, which is SJVN. I mean, it's been recently been declared a Navratna company. Like I said, basically renewable power. I mean, they have about 12 projects, which works out about 2,500 megawatts and 2 transmission lines in operation. And a decently large expansion plan is underway. In fact, they have 4 hydro projects of about 1,500 megawatts, 1 thermal of 1,320 megawatts, and about 11 solar power projects of close to about 2,000 megawatts. And if you see in the next 2 to 3 years, SJVN's capacity will go up from 2,500 megawatts, which was as of FY24, to 10,000 megawatts, which is 4x the FY24 capacity. And if you look at the longer term plans which they have, they're talking about 25,000 megawatts by 2030, about 50,000 megawatts by 2040. So this can be a long-term multi-bagger story. But then if you're talking of the next year or two, I mean, again, we can expect their subsidiary, which is a green energy arm, to come out with an IPO, just like what NTPC has recently announced. So FY26, I mean, I expect the revenues to grow by about 3x compared to FY24, and EPS projected is about 8 rupees. So my target for SJVN is 160. And as far as NTPC is concerned, I mean, there my target is about 480, 490.
Right. Just before we, head to close, a quick word on Gillette, if you track that, because, that stock was holding up in the green for most part of today's trading session. They held an analyst meet yesterday speaking about long growth, levers for the company, including premiumization and the female products, which are doing extremely well for them as well, which now contribute in double digits to their grooming range.
Yeah, but then see, unlike in the past, I think there is a decent amount of competition which is coming up from some of the existing players. You have those new boys on the block. So, I mean, I really don't think that the sort of premiumization which they had in the past and they could get that valuation, I don't think that will happen going ahead. So, I'll really not buy into the story at this point of time. In fact, if it moves up because of this, it could be possibly a selling opportunity for those who've been holding for a long time.
Okay, all right, got that. Amrish, thanks very much. Shorter chat today, but appreciate you being with us and giving us some perspective. We are winding down the day, and the day is going to end with a gain which is a lot lower, a lot lesser, a fraction of how we started. I mean, the opening gap was almost 200 points up, and now we're going to go home with just about a 70-point move. Nonetheless, it's not as bad as the lowest point of the day, so that's something to kind of hold on to. Talk about the large cap screen on the upside, NTPC, the stock that we were just discussing, and banks have really ensured that there's no wider decline. Bank Nifty itself is up about 0.6%, one of the best performing indices of the day. And if you look at some of the constituents, Kotak Mahindra Bank, HDFC Bank, there's a fair amount of green out here. Then you had, of course, a lot of consumer stocks to thank for the fact that we're still closing in green. Nestle, Tata Consumer, HUL, even ITC, last I checked, still up just about 0.25%. Some of these names on the positive side as well. Maruti, Bharti Airtel, Bajaj Auto, these are some of the auto names which have had a good day, even Tata Motors for that matter. So auto and consumer, two good parts of the market along with banks. What didn't work? PSU and more PSU. So BPCL, ONGC, Coal India, a lot of these stocks were lower. And even IT, second day running, I mean, in the morning, these stocks were looking okay. But by the afternoon, by the close, we have a cut of about 0.5% to about 1.5%, depending on which stock you're looking at. TCS being down a whole 1%.
Well, for the mid-cap index, it ended lower, but you can say it ended down, but not quite out, because from the highs of the day, it corrected about 750 points. From the lows of the day, it actually recovered about 1,100 points as well. So there was more recovery than decline from the lows, and that's something that the street would take note of. The Nifty as well, the expiry happened right in the range that the option writers were positioned for as well. Among the top losers on the mid-cap end of things were Vodafone, Idea and Indus Tower. Of course, the Supreme Court news not helping the cause of these telecom players. Then you had Chambal Fertilizers down about 8% as well. And then we did see some decline in a couple of these PSU names like Hindustan Aeronautics, etc. On the way up, the big gainers in the F&O space in particular were United Breweries, the Andhra liquor policy aiding their cause. We also saw some traction in Jubilant Foodworks, which ended about 3% higher, AU Small Finance Bank, and then a couple of these mid-cap ITs actually outperformed the large-cap ITs as well. And that was the word that came in from someone like Nilesh Shah as well, who said that mid-cap IT is a better place than large-cap IT. So First Source and Persistent Systems, of course, we heard from Sanjeev Goenka on First Source. Then from the absolute broad markets, the small cap indices, we had big gains coming in these snack makers, Gopal Snacks, we had Pratap Snacks doing well. Spencer's Retail also on the QCOM foray did well. But on the way down, we had Bajaj Housing Finance down about 7.5% down for the second day running. And also PN Gadgil. After the stellar listing that we saw in the earlier part of the week, the stock ended about 8% lower today and off its 52-week high, down 16%. All in all, a weak session for the mid-cap index, which continues, but not as weak as the lowest point of the day would suggest.
Okay, and with that, it's curtains on this edition of Closing Bell. Many thanks for being with us. But to see you just after this small break. Markets Forward coming up next.